What's going on, everybody? Welcome back to Financial Times with Ted. And we're going to be going over a stock today called Self. It's another dividend stock. This series is called Escape the Rat Race, Retire Comfortably, if not early. I myself have done working in the banking industry after 20 plus years, and the way I did it was to invest heavily in a dividend portfolio, which allowed me to also invest in real estate, which for some reason my office is super dark and it looks like I'm in a black void or a black hole right now. So I'm just trying to get the lighting right in here, but you get the point. Anyways, this is about self storage, that is. This is actually a quarterly paying dividend. You will see the price is $5.12. The frequency that it pays out is quarterly, so that means every 3 months you will get a dividend on this stock. Right now, it's I'm sorry, I'll change that from monthly dividend to monthly/quarterly dividend is 7 cents. So every 3 months you will get a 7-cent dividend per share. So how do I make $50 a month? Well, this one you'll have to invest a little bit more. This one is just under $11,000 that you would have to invest over time or instantaneously, and that would net you or gross $50 a month, or pay you. It's going to pay you quarterly, so every 3 months it's going to pay you just over $150. I think this would total right around $151 roughly. So every 3 months you're going to get a $151 check. This is a great stock to own for a long-term hold because we all know here in Americans, we love our storage, we love our things. And with the baby boomer generation, if you live in Florida, or I'm sure other states are like this too, but I kid you not, driving down the street, it's like a new storage facility is going up every single month. It's insane, along with apartment buildings. And I mean, I had a storage facility, and the guy was telling me they filled up within 90 days. They filled up to over 98% occupied. So it's a massive, massive industry. With that being said, you're like, oh, well, it's only $150, for every $11,000 invested. But if you look at this, I mean, it's only $5.12 a share. It's a very cheap stock. So you sit there and say, it's only $150. Well, if you put that money into a high yield savings account, you're only getting 2.5%. Or what is the going right now? I don't know. Here, let's take a look. Hey Siri, what's the national average for a high yield savings account nowadays? I'm just kidding. Siri doesn't want to answer me. So, I mean, let's take a look. High yield savings. So bankrate.com, the 5 best as of right now: 3.65, 3.2, 4.1, 3.8, 3.8, 3.6. 4.1 is the best one listed in the top 10. So there might be better ones out there, but that's what bankrate.com says. So 4.1%. This one's paying 5.7% annual. So you're getting 1.6% higher, but you're getting a growth stock, or what can be looked at as a growth stock. So if you look at the chart on this, you will see. Here, let me back out of this so I can show you the other screen. And let's see. There we go. All right. So take a look at this. Let me just make sure this is pulled up properly. There we go. All right. So this stock, let me get it in view for you. Again, we're examining global self-storage. Take a look at the chart on this and follow along with me. So back in 2000, let's say you invested at the low and you've been holding this for about 10 years in 2015. Okay. So 2015, you're looking at a price of $3.20. Okay. So you've invested $3.20 in 2015. You have held for 10 years. And that, my friends, let's say you put that $11,000 in there, $3 and let's just say 20 cents, which is what it was about 10 years ago. That's 3,437 shares. So the price of the stock today is $5.12. That would get you $17,611. So over a 10-year period, your growth on that stock would be $6,600. So think about that. That's $6,600 that you would be getting from the growth of the stock, and then you would also have been getting the dividend the entire time. So not only would you be making the average of, and let's say if it was paying, 7 cents back then, I'd have to go back and look at the dividend history, but which we can do. Let's take a look. I'm kind of curious as that as well. So let's see, historical quotes, dividend history. It's a great website. It's Nasdaq.com, and figures my computer wants to freeze right when I click something. So, and where'd I go? We're having technical difficulties. All right, here we go. Dividend history. So back in 2016, yeah, it was paying roughly the same amount. 6.5 cents. So you would actually be getting a better dividend today than you were back then. And the best part about it, you would have had over $6,000 worth of growth in the stock itself. So $6,600 worth of growth plus all the dividends that you would have been making, which would have been over $150 every 3 months. So that's $600 a year for 10 years. That's another $6,000. So technically, if you were reinvesting this in a Roth IRA, you'd be up well over $12,000. You'd probably be up over $14,000 with the residual investment and with the compounding interest. So this is a perfect example of how you can start your path to retirement in a Roth IRA, which will be tax-free by the time you retire, or in a brokerage account, which will get you, instantaneous cash. Every 3 months, you get that $150 check. If you're reinvesting it, thumbs up, sweet. If you need that $150, you can take it. But don't forget, you will pay taxes. So again, this is not financial advice. This is just experience. This is a stock that I own myself. So by all means, I hope this keeps you going on your financial path and gives you a good little boost and a good little insight. It is a lower paying dividend in terms of the real estate investment trust realm. As you can see, the last ones we looked at, that was I think around 15%. So AGNC was paying 14%, BCAT was paying 20%. And you might say, well, Ted, why don't I just buy those instead of buying something that's at 5%? Well, you can't put all your eggs in one basket. You got to make sure that you're diversifying. Got to make sure that you're spreading out your portfolio. That way, in case one stock, if Global Self Storage goes out of business or removes their stock off the stock exchange, which it has happened, but this stock has been in existence for a good long time. So it's let's see if we can see when this stock actually hit the market. So looking at it, it looks like the all-time, this stock came out in 2014. So you're looking at a solid 12 years. This stock has been going for a solid 12 years running. I honestly don't see Global Self Storage slowing down anytime soon. That's just my opinion. That's not financial advice, but by all means, do your own research. Nasdaq.com, Yahoo Finance, CNN Money, Fox Money, whatever you want to look up, or your brokerage, Fidelity.com, Robinhood. I'm sure they have a ton of articles that you can read about this company. So let me know what you think below. Comment, subscribe. Let me know what stock that you're looking at, or if you want me to look at a certain stock next. So remember, escape the rat race, retire comfortably, if not early. This is how you do it. Time over time, reinvesting, dividends. That's how you build your portfolio. If you want to mix it in with blue chip stocks, awesome. Hedge funds or mutual funds, bonds, whatever it may be. But this is a solid way to create income on a consistent basis, weekly, monthly, quarterly. So let me know what you think below. Appreciate you coming out. You have a good one.